Hello everybody. So in today's video, we are going to be delving into building our trading strategy. As a beginner trader, you need to have a working strategy if you are going to be profitable in the financial markets. The reason why majority of people lose money to the market is because they don't have an edge. They don't have any strategy that is making them to be profitable in the market. That is why you need to actually build one so that you will not lose your hard earned money to the market. All right. So you want to be part of the smart people that actually have an edge, make use of that edge to be more disciplined, to have more emotional control and trade the financial market for profitability. So in this video, I'm going to show you step by step how the forex market actually work, how money is being moved in the market, and I believe that this is going to make you to be profitable in the forex market. So let us get right into it. Alright, you are welcome back to this video tutorial. So in today's video tutorial, I'm going to be talking about developing a trading strategy. One thing you need to understand as a beginner trader is that there are two types of trading strategy. We have the fundamental analysis and the technical analysis. Fundamental analysis is based on trading with news. For example, if a news comes out on a particular currency in the US, when the news comes out, we can trade the financial market based on this news. Okay, so it is as simple as that. But I don't trade the financial market based on news. All right, so I prefer to trade the financial market with technical analysis. Technical analysis is trading the market, looking at the structure of the market, trading the market in supply and demand and other confluences. All right, so we have a lot of chart pattern in the financial markets, and before I proceed, I want you to know that you don't need all these chart pattern. All right, so as you can see on the screen, we have the bearish double top. Okay, this top, we have the bearish head shoulder. So these are the diagrams. Okay, the chart pattern are so many that you cannot know all of them off head. All right, so you don't need all this chart pattern. All right, you don't need all this chart pattern because the strategy that I'm about to show you is all you need to be profitable in the financial markets. And this is where we are right now. This is the source of the market. Okay, so this is called the market mechanics. I learned this market mechanics from my mentor, the Trading Geek, on YouTube. And since I have learned this market mechanics, I have developed so much in trading the financial markets independently. I understand the concept of the money flow in uptrend or downtrend or in consolidation area, and it has really built my experience so much that I can now trade the financial market by myself. And because of you watching this video, I'm going to explain this to you right now, and I believe that you are going to understand so much. So let us delve right into the lesson. We can see from below here that the buyers are in control of the markets, and I told you in the previous video. Okay, so when the buyers are in control of the market, it doesn't mean that they are going to be on a straight line. They will not be buying on a straight line, because one thing you need to understand is that market is, like a car. Okay, it's like a car. When a car gets started and it moves for some time, there is a need for the driver to change the gear. All right, there is a need for the driver to change the gear before it continues the movement. All right, if the gear is not changed, the car will not continue to move, or the car might stop. Okay, so this same concept of car applies to this forex market. So what I mean by that is that we can see that the buyers are in control right there, and at some points they were unable to continue going up. So there is a reversal in the market whereby the sellers quickly take control of the market to reverse the market downward. Okay, So immediately they got to this point, the buyer said that, oh no, we are still in control of the market right now. So they push the market upward, creating a break of structure right here. Now, one thing I want you to understand is that immediately the buyers took control again of the market right here. We have a demand area right here. We have a demand area. Okay, so demand area is where buyers took control of the market, the starting point at which the buyers, the bulls, take control of the market. All right, so this is our demand area. So at some point, while the buyers were in control of the market, they got up to this stage, okay, because they didn't have more fuel to continue this journey. There is a need to, to switch the gear by the sellers coming into play, okay, by reversing the market a little bit downward. And at some point, we expect that the buyers is still going to be in control of the market, but they were unable to push the market up. All right, they were unable to push the market up. Now, because they were unable to push the market up, we can see that immediately the buyers got to this stage, they don't have more powers, they don't have more buying power in the market, and this caused the market to go downward. This causes the market for the sellers to be in control of price right now, and immediately the sellers took over this recent low here, this higher low here. It means that we now have a market shift. Okay, this market shift simply means that at some point we know that the buyers are in control of the market, but right there, because the sellers has broke through this recent low, because the buyers don't have much power to continue this upward movement, it means that the sellers are now in control and they have created a market shift right there. So it simply means that the bias of the market has changed from buying to selling. Okay, so now you can see that this is the point at which the sellers push the market downward. They took over the buyers right there. Okay, so this is our supply zone. I believe you understand that. Now, one thing I want to explain to you is that markets seek liquidity in the market. Liquidity simply means money. Okay, so liquidity simply means, for example, there is a liquidity below every highs and low in the market. There is liquidity in every highs and low of the market. All right, there is liquidity. So right now we can see that the sellers has broke through this recent high, okay, making the market shift. And at some point, the sellers have to seek for more liquidity before they can continue going downward. All right, you can see that they were unable to go downward right here, so they reverse a little bit, come down, okay, creating a break of structure right here. Okay, and when they got right there, they still don't have much power to push the market downward, and thereby the buyers took control of the market, clearing the liquidity above this high. Okay, and they push up to this stage. Okay, so the intention of the sellers right now is that they want to seek liquidity to the previous supply zone before they continue the major move to the downside. And as you can see that the buyers reverse the market up a little bit, the sellers comes down, the buyers took it up. Okay, they took it up to the beginning of the supply zone. I want to believe that you understand this. Okay, so right now immediately they have reversed the market to the previous supply zone. Okay, you can see we have this supply zone right there. Okay, immediately the buyers push the market to this supply zone. The people that they are in control of the market are the sellers. So because this is the previous supply zone, the price has actually respected this supply zone, and it causes the markets to go downward. You can see this sharp movement downward. Okay, you can see that sharp movement. So what I'm going to explain, what I want you to understand right there is that markets seek liquidity above highs and above lows. Okay, but because it is the sellers that they are in control of the market, they have actually created a market shift around there.
So they need to seek more liquidity to the previous supply zone before they continue their major move to the downside. So we can see that immediately price has respected this place, immediately the sellers has respected this place, they push the market downward, creating a break of structure to the downside. And you can see that immediately they got to this point, they were unable to go downward. So there is a reversal in the market. Okay, so when there is a reversal in the market right here, we can see that the sellers is still in control of the market. They still have more power in the market to push the price down, and they push the price down right there, creating another break of structure. And then when they go right there, they need to seek more liquidity in the markets before they continue their downward movements. All right, so you can see that the market was actually consolidating around there. And in the previous video, I told you that when you see a consolidation market like this, you don't trade, because when the market is consolidating like this, you don't know if the market is going to go up or down. So that is why it is recommended that when you see a consolidation market, you don't trade. You close your laptop, you don't trade consolidation markets. Okay, but we can see on the screen right now that when there is a consolidation at this stage, the buyers are a little bit in control of the market, but the intention of the sellers is that they want to seek more liquidity to this supply zone before their major move downward. Okay, so when there is a reversal by the buyers around there, they push the market down, creating another break of structure, but there is a reversal again in the market, respecting this previous supply zone. Okay, so you can see that immediately price respect this supply zone, the market skyrockets downward, very sharp movement to the downside. And as you can see that when the buyers are in control of the market, you know that we have a demand zone being created around here. And you can see right now that the sellers has been selling downward. And the moment that the sellers got to this stage, okay, the sellers cannot be in control of the market forever, and the buyers cannot be in control of the market forever. Okay, so but you can see that immediately the sellers got to this stage, they want to seek, they want to respect this demand zone. Okay, before they continue the movements. All right, so immediately the sellers push the market down here, the buyers retrace the market upward, and the sellers push the market downward. Now what happened right here is that you can see that the demand zone I mark right there, this zone has not reached that place. It has not reached the demand area, but you can see that immediately we have this sharp movement to the downside. Price has respected this zone. So it simply means that price has retested the previous demand zone. Okay, the previous demand zone. And when this happens, you need to look out for what is going to happen in your demand area. All right, so now you can see that the sellers push the price down, but when the buyers took control of the market, all right, like a little bit of reversal, one thing that I want you to understand is that if the market is creating lower highs and lower low, we expect that if this market is going to continue, this reversal is not supposed to break through this zone. Okay, it's supposed to come down, create another lower high before it continue another lower low. But this is not what happened around here. What actually happened right here is that price has respected this demand zone because the buyers are actually in control of the market. And because price has actually respected this zone again, there is going to be another market shift. And what is going to make you to know that there is a market shift in the market is because the moment price reached this place, it broke through recent high. Okay, this happens because the price has respected the previous demand area. Okay, that is why you need to always look out for your demand or supply area. There is going to be a shift in the market. Okay, so we see that markets, the buyers push price above this high. Now they have created the market shift right there. Okay, so when they create a market shift, it means that we now need to look out for buying opportunities. You know, all the way from here, the sellers are in control. But when the sellers got to this demand area, they were unable to push price to the downside again. Now the buyers now say that now we are now in control of the market. We need to be in control of the market right now. So the buyers took over the market, creating a market shift. And when they create a market shift, they retested this zone around here. Okay, they retested this zone around here, and they continue to push the market upward. Okay, so you can see the market retrace downward. It goes up. It could not create an higher high right there, but it wants to seek more liquidity in the market. So it goes downward, respecting this demand area, and push the price up, you know, and reverse a little bit and continue the upward movements. All right, so I'm going to go on to the chart now and see some example of these market mechanics. All right, so we have, so let me just change the pairs to another pair. All right, so let us use USD JPY. All right, so we can see that we are on the 4-hour time frame. Okay, so we are on 4-hour time frame, and I'm going to clear up these markups that I have made on the chart already. So right now we can see that we are on 4-hour time frame. Now I'm going to explain market mechanics for you right here. We can see that price, let me start from here. All right, let me start from here. You can see that price was pushing upward. Okay, price was pushing upward, and because price could not continue upward movements here, what actually happened right here is that we have a demand area here. Okay, we have a demand area here. Let me zoom that for you. Let me zoom it. Okay, can you see that? We have a demand area here. Okay, we have a demand area because this demand area is the one that causes price to go upward like this. Okay, it pushes the price upward, creating a break of structure around here. This is our break of structure. Okay, so because market has created a break of structure around here, and we know that we have a demand area around here. Okay, so when the price got to this stage, we know that immediately the market pushed price up here, it retraced a little bit. Okay, you can see this red candle. Okay, this red candle. So if I switch down to the 1 hour, you are going to see that okay, hold on, let me look out for that candle again. All right, oh, where is this candle? Okay, so this is it. You can see right here that the price, when we have a demand area around there, price push to the upward, but at some point price could not continue to go upward. It retraces a little bit. All right, so it means that when price retraces like this, it means that we now have another demand area around here. You need to mark that. We need to mark that. Okay, so since we have a demand area around here also, you see that price continue to push to the upward. But at some point, now this is what I want you to understand. Now price push to the upward movement. Now because price cannot continue to be going in a straight line, price have to seek for more liquidity in the market. So what actually happened here is that we can see that the market creates another break of structure around here. Okay, it creates another break of structure. So when price goes up, okay, price goes up here, and at this stage you can see that price was like consolidating around here. Okay, so this is how you mark up your charts. so that you can understand what the market is actually doing. You can see that the price doesn't have direction right here, okay? But at some point, we can see that the price broke through this range. It broke downward, okay? Immediately it broke downward, it comes back up a little bit. And what price actually did here is that price actually respected this supply area, okay? Price respected this supply area. That is what happened right there, okay? So what we call liquidity in the market is this. So we can, you know, I told you that liquidity sits above and below and above highs and lows, okay? So this is our liquidity. So now, because the market broke through this range right there, it comes back up a little bit, retesting this, what causes this price to come down, okay, which is the supply area, okay? So we have this as our supply area. So let me write that there, okay? Let me write that. So let me write that, okay? Supply area, okay? Center. All right, can you see that? So this is our supply area, okay? So since price has tapped into this supply area, it causes this market to go downward, to come and respect this previous demand area. I want you to understand this very well, okay? So let me just take this off, okay? Let me not extend this. You can see price respected this supply area, making the price retrace down to the previous demand area. And by that, we can see that price swept some liquidity below this place, okay? You know that this is the lowest point, and if you mark this up right there, you can see that price has swept liquidity, all right? And immediately price swept liquidity, we can see what market did right there, okay? The market swept liquidity down here before it continues the upward movement, okay? Before it continued the upward movement. So you can see that price continued to create upward movements. And if I change this time frame to 4 hours now, okay? So, all right, so this is the zone right there. Okay, so we see that the supply area makes this price to come down here to respect this previous demand area before price continue to go upward, okay? So, and as you can see that another break of structure that we have here is this place, all right? So this is how you mark out your break of structure, okay? So this is what, so now because we now have our break of structure around here, let us see what price is doing now. You see the market continue to go up, okay? Market continue to go up, and we can see that market reached this place and it could not continue to go in an uptrend, okay? So what the market did right here is that we need to mark out our previous break of structure, okay? So this is one break of structure to the upside. So there is a break of structure, all right? That is a break of structure. So this is the break of structure that leads to these upward movements. So right now you can see the same thing that is happening in the market. So now because we have a break of structure, where is our demand area? Our demand area is below this place. So I'm going to mark out this red candle, okay? This is our demand area, all right? So if I mark out this place, I'm going to extend it to this place, all right? So you can see that the market respected this demand area, all right? Okay, so let me just write it there. That's our demand area, okay? Let me just write it in full. Demand area, okay? Inside center. All right. So you can see this. You can see I want to believe that you understand this concept very well. I want to try as much as possible that you understand this concept, because we were working with the 4-hour time frame, okay? And I told you that in 4-hour time frame, we can see what the market is actually doing here. We see that immediately the price broke through this structure, price retrace, continue the upward movement, creates another break of structure right here. And when price creates a break of structure right here, now the market could not continue the upward movement. Now what the market wants to do is that it wants to seek more liquidity in the market before it continues the upward movement. So what we have to do is that we want to look out for the previous demand area that causes this price to go in an uptrend. So, and if you want to spot that, you need to know where your break of structure is, and below your break of structure you can see that I have marked out the demand area. So this is what I look out for when I want to trade, and you can see that the market got right there. It was retracing downward. It is creating lower low, lower highs, lower low, lower highs, okay, lower low, lower highs. All right, and you can see that immediately this price got tapped into this demand area, the price could not continue to go up. Okay, so what is happening right there is liquidity. So this is what we call liquidity sweep. Okay, this is liquidity. Then when price got right there, it pushed up to a little bit and swept this liquidity again. Okay, you can see it swept this liquidity again. It swept this liquidity again. All right, so you can see it swept this liquidity again. So you need to understand this concept, and you can see that when price goes up a little bit, it comes down. Okay, so price respected this demand area again around here. All right, and then it causes price to skyrocket upward. So what we have right here is that price respects demand area and liquidity. All right, so this is how market mechanics works. Okay, so if I'm going to trade this pair right now, so what I can see in the market right now is that I know that we have the highs here. This is the highest of the market, highest price of the market. Okay, and I can see that the market supposed to have broke through these highs. Okay, because the moment the price respected this demand area, price supposed to broke through this recent high. But right now, what the market is actually doing is more like the market is consolidating. If you look at it very well, see right there, the market is actually consolidating around here. So I cannot actually place a trade when a market is consolidating. Okay, I cannot place a trade when market is consolidating like this. So right now, I want to believe that you understand how market mechanics works. Market mechanics works with supply and demand, liquidity, and break of structure. All right, this is how forex markets work.